Welcome to MarketTamer.com. Today we're going to discuss unknown unknowns. I was speaking yesterday with an individual who's got a background in Morgan Stanley, Goldman Sachs. He's a banker and also worked in private equity and really has a good solid understanding of finance and the markets. And he said to me this quote. He said, "Unknown unknowns pose the greatest risk to stock market investors." And I thought it was a remarkable quote that was worth sharing here. So what does he mean by unknown unknowns? Well, to answer that, first it's probably worth considering what known unknowns are, and they would include things like earnings reports, economic reports, FDA announcements, interest rate changes. So what happens? Well, we're coming into earnings season. We're already in the middle of earnings season, and we know that our company is about to report. What's going to happen, we don't know. All we know is that there is an earnings report and it will produce an outcome which is unknown. So it is a known unknown. Similarly with economic reports, we know there's a schedule by which the reports will be announced. We don't necessarily know whether the number will be above or below expectations. We just know that it could produce volatility in the market. So again, it's a known unknown. Similarly, those companies that depend on the FDA for approvals or denials, often there is a schedule whereby we know when the announcement will take place, and we know that it should produce volatility. Again, when the Federal Reserve announces interest rate changes, we know that if interest rates go down, usually the market goes up. If interest rates go up, usually the market goes down. We just don't necessarily know which way the interest rates will go. At this point in time, obviously, interest rates are so low that the likelihood is higher rather than lower. In fact, it's almost guaranteed. Nevertheless, in most circumstances, when there are changes in interest rates, if we don't know which direction the change will be, we don't know what the outcome will be. We just know that there will be a change. However, if we move on and we consider what might unknown unknowns be, well, they can be many things which we don't know by definition. For example, we don't know, there's no schedule or announcement of corporate fraud. If somebody is defrauding a company, we don't know. That will be announced as a shock. That will come certainly as a shock to the general public, to investors, stakeholders, and so forth. Similarly, if you take an example where, for example, Steve Jobs became ill, that came as a surprise to many people and initially impacted stock price. And that's just not something we can foresee. So essentially, something that is unforeseeable is an unknown unknown. A terrorist attack, for example, something like a 9/11 terrorist attack comes as a complete shock. It's not foreseeable. We don't know what's going to happen in the future, but we know that it could produce a big shock and impact stock price and indeed the market itself. And there are dozens, if not hundreds of thousands of these possible unknown unknowns. And it's really the result of people not having the ability to see what's ahead of them that causes a lot of pain in the stock market, because although they cannot see what's ahead of them, they don't take any action to mitigate risk of what is not foreseeable. So that's maybe a long-winded way of saying that we must always hedge and we must always find ways to account for what might be unknown and what might hurt us. And there are two ways of doing this, in my view, both of which are needed. One is position sizing, so never let any position dominate a portfolio, and the other is position hedging. That is, even if you have a diverse range of positions in a portfolio, but none of them are hedged, well, that's not a smart idea either. And so having a combination of position sizing and position hedging is really what our specialty is at Market Tamer. And in fact, this evening, we invite you to join us at a presentation on the Greeks, where we'll discuss risk in much more detail and some of these aspects. So we look forward to you joining us there. If you have any questions, please don't hesitate to ask us.